Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. I have my esteemed co-host, Matt Nadeau here.
Hey, everyone.
By the way, I hope everyone's staying warm. It's so cold outside, Matt.
That's why I got the
going on?
sweater on today. I'm freezing. I'm bundled up. I'm already past this, and it's already just the beginning of December.
It's one of those polar vortex or Arctic something. I saw it was so cold last night when I looked out my back window. I could have sworn I think I saw a polar bear in the woods behind my backyard, but I don't know.
Bundle up. Yeah, we have a bunch of our clients coming out for our holiday Christmas movie event this weekend. So stay warm. Come enjoy the movie with us. We can't wait to see you all this weekend, but stay warm.
That's one of our favorite events each year. Well, we are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington. And we are fiduciaries. And as an independent, family-owned firm, we truly have the freedom to focus solely on your interests and not some corporations or those shady private equity companies that are buying everything up these days. Our values and what we stand for is the polar opposite of them and their business model.
Yeah. And as always, we're going to take a minute, say hi to our clients out there, not to the private equity people out there. We don't like any of you, just our clients. We love every one of you, and we appreciate the trust you've placed in us. And we have a great show planned today. A couple of important things we're going to be talking about. So next week is a huge week where we have Oracle's earnings coming out. We have some information about ChatGPT as a new model. We're going to talk about why that's important. And then later in the show, we're actually going to jump in and talk about these Trump accounts. And specifically, you may have heard that Dell has pledged $6 billion or something like that towards this for 25 million kids. So we're going to talk about some of those strategies for your kids and about the pledge for the Trump accounts.
Absolutely. And of course, before we start, we encourage you to please subscribe to our YouTube channel on moneyhourradio.com, where you can see this week's episode along with previous ones. It's totally free. It doesn't cost you anything, but it's a huge boost to our channel. So please like and subscribe. You can also please subscribe to our weekly economic newsletter called the 5-Minute Market Brief. It's wonderful. It's succinct, lets you know everything about what's going on in the market that's this week and last week. And then please follow our BN Wealth social media pages on Facebook and Instagram.
All right. Well, let's jump in, because next week's shaping up to be a pretty important week for whether or not we're going to get a Santa Claus rally to finish the year, or maybe a Grinch disaster in the market. And actually, it's really starts with Oracle's earnings on Monday. And let's talk about Oracle a little bit, right? Concerns about gigantic capital expenditure and deteriorating financial ratios for major AI-linked tech companies are one of the causes of this recent AI skepticism we've been seeing. And it was one of the main reasons we saw some pullback in stocks, especially early in November, on all of this skepticism.
And in many ways, Oracle is now like the poster child for these AI concerns, as the company commits hundreds and billions in capital expenditures to build out all of this AI infrastructure, leading to actually real deterioration in its financial ratios. They're actually now running a negative number on their cash flow because of that, and therefore the interest rate on their credit default swaps has doubled recently, which signals lower credit quality and higher risk. But Oracle needs to reaffirm that it is confident all of these investments will have a positive return on investment soon, and it's staying fiscally responsible, of course.
So you're saying after they do earnings this time, they're not going to jump 40% like they did last time?
That was, boy, you can't keep that pace up, right?
No, but hopefully it comes out strong and positive, and it kind of keeps the momentum going.
No doubt.
Along those same lines, AI, it's important. And actually, ChatGPT has been critical over the past few years. They launched 3 years ago, and then tech behemoths like Google, Apple, Microsoft, Meta, and others were actually caught with their proverbial pants down. And ever since then, they were trying to catch up. So they're spending billions on chips and infrastructure just to catch up with ChatGPT, but with very limited success. Well, Google then has improved, and they released its Gemini AI Model 3 last month. And many people are now saying it performs as well or maybe even better than ChatGPT. Now, okay, you say, well, what's the problem? Well, the Gemini update represents a massive risk to ChatGPT because people may just say, okay, well, you know what? Let's just move over to Google and we'll use Gemini instead of ChatGPT.
Matt, this actually brings back memories. Who remembers how in the early 1990s, a service called Prodigy was actually the first widely used email and web software? But then it was later surpassed by AOL and websites such as Yahoo and Google, and ultimately Prodigy closed. In the mid 2000s, a company called MySpace was the first widely used social media platform. However, it was passed by Facebook and has since slid into relative obscurity. Actually, it's kind of like a joke now. If you say MySpace, usually it's some type of joke or some funny
Yeah.
story.
Anybody who's under the age of 40 is like, Prodigy, MySpace? Who are these people?
No doubt. But you can see the analogy. And Google being a gigantic, well-capitalized company, I mean, they're basically printing money to have so much money. They could create the same story for ChatGPT. And this is very important because ChatGPT has committed to spending more than $1.4 trillion over the coming years to build out its AI infrastructure. And the entire tech industry, the broader market, and the US economy have all benefited from the ongoing and future capital expenditure boom, and that can quickly dry up if Google's Gemini takes all of its business. And that could actually result in cancellation of many of these AI infrastructure projects. And if the money dries up, it can drag down the whole tech sector and really the overall market.
Yeah, and we really got to keep watching it. And then it really just brings to question what is the biggest reason that this AI bubble might pop. And again, AI companies have promised to build up their computing capacity by massive amounts by year 2033 is kind of the target. And really it comes down to power. Currently, we have enough capacity for 60 gigawatts. Now, AI companies need to up that to 250 to 300 gigawatts. That's like 5 times. I don't know what those numbers mean in reality, but it's 5 times bigger than what we have now. And that equates to the electricity required for the whole country of India. No small amount. And that's really almost impossible to do in the next 7 years.
No
So
doubt.
guess what? AI companies, they steal permits, transformers, grid updates. None of those move at the speed of light. They move more like the speed of turtles. And this is the single biggest reason why this AI bubble may pop, because the capital expenditures and investments, they might just have to pause if the electricity grid cannot match that growth. Remember the story of the tortoise and the hare? Well, basically, the hare is constrained to moving, in this case, only as fast as the tortoise can.
No doubt. And actually, I did some research. 1 gigawatt is equivalent to 1 billion watts. So
No
massive.
small amount. Yeah.
No doubt. So we will be monitoring these events very closely, of course. Like we said, next week is a big, big week, and we will react accordingly in our Advance and Protect tactical models that we manage for our clients so far. And we've been sharing this with you on air over the last few weeks while we had this storm that was happening. So far, it wasn't anything that caused us to take our foot off the gas. The storm was still at a range of what we consider normal turbulence for the market. We were watching it, but we did not take our foot off the gas. We are still bullish and heavily invested in equities. In fact, in some of our more growth-oriented models, we are 100% in equities, and we have been for months. We have gold, silver, copper. We have a magnificent 7 stock sleeve. Those areas are kicking butt, but we monitor our investments every single day. And if market conditions deteriorate, we will actually get defensive by selling out of the stock market and going heavier into bonds or cash while we wait for things to improve. And that's because we do not believe in riding down a potential market crash all the way to the bottom. We will literally get 100% out of the market at times if we see that the conditions warrant it.
Yeah, and we really feel, especially if you're out there and you're in retirement, you need to have a disciplined sell strategy to exit the stock market and protect your money if the risk of a major crash gets too high. And you should ask yourself or your financial advisor, what's our defensive plan? What do we do to protect our money from a potential market crash? And if you hear this and if our investment philosophy resonates with you and you want to look at having your money managed with something tactical that can protect your money, reach out to us, schedule a complimentary consultation. We'll go over your full financial situation, your goals, and if we can help you, that's great. And if not, hey, we'll still part as friends. So give us a call at 847-780-2980 or go to bnwealth.com to sign up. Anyway, don't go away. When we come back, we're going to talk about these Trump accounts. Welcome back. Thank you for tuning in. This is Money Hour Radio, a show where we try and help you grow your money, pay less taxes, and of course, have a beautiful retirement. I'm one of the co-hosts, Matt Nadeau. I've got with me our other co-host, Ben Barzideh.
Hello, everyone.
And we're both founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's a comprehensive financial planning firm. We're local, located right here in Barrington and serving the greater Chicagoland area.
And we have a simple motto. It's do great work, have fun, and give back. And it's important to us to try and help enrich our local community, and why we started the charitable arm of our company called BN Giving, a way for us to invest in your purpose with you. And how it works is if you become one of our clients and you're a faithful tither or a regular giver to a qualified 501c3 charity, just let us know. Each year, we will match your donation up to 10% of the management fee that you pay us. And as our firm grows, so does our collective impact. It's such a neat concept. We're so proud of it.
Yeah, and we actually have a fantastic 10-minute video, easy, short to watch. It's on our YouTube page. You can go to moneyhourradio.com to find it. And it's titled The 6 Best Ways to Give to Your Church or Charity. And what we found is a lot of people who want to donate or give don't know that there's better ways to do it, ways that you can maximize your impact. So we wanted to put together this video. And also, if you're part of, let's say, a church or charitable organization, take a minute to look at that and you can learn more. And then if that resonates with you and you want to explore more about this kind of strategies, reach out. We'd love to connect. And our team actually will offer complimentary educational options on tax efficient giving and different strategies that will allow your donors to help maximize their tax deductions. And it also allows the church or charitable organization in many cases to receive more money than they would otherwise. So it's a win-win. Now, listen, if you're not a regular giver, we understand not everybody is. That's great. We'd still be honored to work with you. But if you are, please, if you want to learn more on how to join our BN Giving community, reach out to us online at bnwealth.com or call our office at 847-780-2980.
All right. So speaking of giving, the Dells did something very nice this week, and it was all over the news. So we want to talk about how Dell pledges $6.25 billion to fund Trump accounts for 25 million kids. And we discussed this new type of savings account, investment account called Trump accounts, a few months ago on our show as we were unpacking the provisions in a new act, the One Big Beautiful Bill Act, the new tax law. And these Trump accounts are designed to help our kids save annually for their future, for maybe their home ownership or educational needs. Maybe they want to start a business. And just as a refresher, how this bill, how these Trump accounts work is it allows parents and relatives and others to contribute after-tax dollars up to $5,000 a year in a child's name. And it allows the money to grow tax-deferred until the child reaches age 18. And how it works is children born in the United States between 2025 this year and 2028, they will have seed money from the federal government in that account in the amount of $1,000. So the government will put $1,000 in there, and you can put up to $5,000 in there, either you or family member or even an employer.
Yeah. And, Kiplinger reported on this, that there are many companies who are saying they might be on board in terms of, voicing support for these Trump accounts. Well, that's where it comes out with the Dells, where they pledged a $1,000 match for its employees' children into Trump accounts under the new tax provision. And then they said, well, hold on, let's take this another step further. And the owners, Michael and Susan Dell, pledged $6.25 billion to fund Trump accounts for 25 million kids in America. I mean, good job, man. Nothing I can say but, go Dell.
No doubt.
Maybe people will buy a few more of your computers. So, this is actually the donation is going to be the largest ever that was devoted to American children. This is according to Invest America, a nonprofit advocacy group that's partnered with the Dells. And I'm going to quote Michael Dell. He said it's designed to help families feel supported from the start and encourage them to keep saving as their children grow. And this was what Michael Dell told CNBC in an interview. And he goes on to say, we know that when children have accounts like this, they're much more likely to graduate from high school, from college, buy a home, start a business, and less likely to be incarcerated.
Absolutely. And parents will be able to open and contribute to these accounts starting on July 4th of 2026 with IRS guidance yet to be issued. Now, the Dells have committed to seed Trump accounts with $250 for children. So each children will get $250 who are 10 years of age or under and who were born before January 1st of 2025. And according to Invest America, pledge funds will cover, like you said earlier, Matt, 25 million children ages 10 and under in zip codes with a median income of $150,000 a year or less. And what Dell said was, we want to help children that weren't part of the government program. So this will help cover that range of.
Yeah. And I mean, it goes back a little ways because, Texas Ted Cruz was the architect of these Trump accounts. And he had a news conference with, President Trump and the Dells earlier this week. And here's some of the items he touted. And he said, we're creating a whole new generation of capitalists who will experience this benefit of compounding growth. And let's just use a real simple example. Let's look at a girl who's born next year. So the government's going to auto seed that account with $1,000. Let's just say either the parents, grandparents, an employer, somebody along the line helps add another $5,000 to the account each year. And it's just invested real simple in the S&P 500 index. And again, just as an example, we're going to use that. So if we just assume a very simple 7% historic rate of growth, by the time that child's 18, that account will have grown to $170,000. That's great. And then just think, if she keeps saving until age 35, that girl could have upwards of $700,000 in that account. That is truly game-changing if done right.
Absolutely. It's massive. And then, so piggyback on that, actually, here's another game changer. So first of all, we're going to change the subject. Go Dell. Very nice of you to do that. But here's another game changer. When we think about saving for our children's future, and I'm not talking about the 529 plans, the ones for college or custodial accounts, which are, great vehicles too in their own right. But one of the most powerful vehicles, an overlooked one, and it's a powerful tool, is the Roth IRA for our kids. And yes, kids can have Roth IRAs. And the earlier they start, the more time their money has to grow tax-free. And here's the magic. Contributions to a Roth IRA are made with after-tax dollars, and the growth inside the account is completely tax-free. Imagine your child putting away just a few $100s from summer jobs or chores. Over decades, thanks to compounding, that small start could grow into tens of thousands of dollars. And it's like planting a seed that turns into this mighty oak tree by the time they retire.
Yeah, and it gets them started early. That's one of the benefits. And Roth growing tax-free over time is just a beautiful thing. Now, there are some key requirements, like you can't just put money in their account randomly. They actually have to have earned income. So that doesn't mean allowance or gifts from grandparents. It truly means they have to have some money earned from work. But here's what's really neat about it. The IRS, while not typically known for generosity, they've actually been pretty generous on what qualifies as work. Right? So they'll actually say, well, hey, things like mowing lawns, shoveling snow, babysitting, a part-time job at the local store, all of that can count as income. And you got to be reasonable. You can't say they mowed a lawn for, $10,000. But if, let's say, your child over the summer earns $1,000 mowing, grass, they could then make a contribution of up to the $1,000 that they earned into a Roth IRA. And again, they're subject to the maximum annual limit, but 1,000 is less than that limit. And then parents, you could even help a little bit, maybe by matching their child earnings. So let's say the child just wants to put 500 in the account, keep a little 500 for themselves. You could gift another 500 to reach that $1,000 contribution.
And the beauty of starting early is that kids learn the value of saving, investing, and watching their money grow. Plus, Roth IRAs offer flexibility. So the contributions can be withdrawn tax-free at any time, which means those funds could help actually with college or even a first home purchase down the road for your child. And these wise financial strategies are unfortunately, they're not taught to our kids at schools. So it's more important than ever for parents, us as parents, to help educate our kids on the benefits of saving and investing early in life. And the Trump accounts and Roth IRA accounts for our kids are a great way for parents to help kickstart this important lesson for their kids. And the sooner they learn to save and invest, the more time they have to let the magic of compound interest do its work. It's like a snowball. It just gets bigger and bigger and bigger.
Yeah, and remember, with any financial planning, investing, tax advice, you need to work with a qualified professional who understands these. Again, if you're interested in learning more about us and working with you in strategies like this, give us a call, 847-780-2980, or go to bnwealth.com. All right, we're out of time. Have a great week, and we'll see you next time.
God bless everyone.
Bye.